What's going on, everybody? It's Stas here. Welcome back to another video. So today we're going to be breaking down the top 15 stocks. You heard it right, guys. 15 stocks that I'm looking to buy heading into this upcoming week in the stock market. And we also have to go over what happened last week in the stock market, breaking down some technicals here on the S&P 500. And we're also going to cover the futures market, which, let me tell you guys, is looking pretty green right now. And there are also a bunch of other companies here this week that are reporting earnings that I briefly want to go over today. So if you guys find value, hit the like button, subscribe to the channel. We're trying to get 20,000 subscribers, so make sure to subscribe and check out the free links down below, the Discord chat, the Facebook group, and if you guys want 3 free stocks from WeBull, that actually runs out here on the 18th of November, so make sure to deposit $100 using that link, and you get 3 free stocks valued up to $1,600. So let's get into it, guys. Last week was a crazy week. On Monday, we got some great news from Pfizer of a V-shot, right? And I'm using code words here just in case YouTube tries and shadow bans me, which I think happened in one of my videos last week. But anyway, we got some good news from Pfizer last week. The markets went crazy. Dow Jones, the futures on that night, heading into the morning, Sunday into Monday, they actually hit up almost 2,000 points. So Dow Jones exploded, hit an all-time high. A bunch of recovery stocks did extremely well, and by recovery, I mean those stocks that got hit the hardest in the beginning of the crisis and that honestly are still struggling now. Think hotels, restaurants, a bunch of other companies like that. They did extraordinarily well, so the Dow did very well, and the NASDAQ on the flip side actually took a hit because a lot of the stay-at-home trades, think of Zoom, Netflix, a bunch of tech names, they actually took a big hit. So NASDAQ went from 12,260 all the way down to 11,500 literally in one day. It trimmed about 6%. So a lot of the momentum was in, again, the recovery stocks and the Dow Jones last week. And going back here to the S&P 500, S&P 500 also hit an all-time high along with the Dow Jones. You guys can see it here. 36.45 was that all-time high on the S&P. And if you guys remember, we hit the all-time high, but then we actually aggressively sold off the same day, trimming about 100 points on the S&P from 36.45 down to about 35.45, which was about almost a 3% drop in a single day. And then from there, guys, you can see the next couple of days here on the S&P, we hit 35.10, rallied back up to about 3600, got rejected, then we went back down to 35.10. We double bottomed there and broke out, which at this point is looking pretty bullish, right? Double bottom followed by the breakout, and we closed right around 35.80, right above it, honestly, which is pretty bullish considering we closed above that resistance from the 11th of the month. And now that we're seeing the futures moving up quite nicely, that's telling me, okay, S&P 500 is breaking out of 3580 and it's actually getting back into 3600, which is putting us in this next gap right here, the next gap, which is between 3600 and the all-time high at about 3645. So speaking of the futures, guys, and that's my brief little breakdown on the S&P and the markets. Hope you guys like that, right? Little 2-minute breakdown. And the futures here, S&P 500 futures are up 0.7%, up 25 points, which again puts us above that 3580, 3600 resistance. So, hey, we might be running up this week to get back to the all-time highs. That's very possible now that the futures are gapping up. That's in play this week. And mind you, guys, you have to take the futures with a grain of salt because for all we know, we could wake up tomorrow and the futures are down a ton. But if they end up staying the way they are now, large caps end up gapping up tomorrow, doing well in the morning, we might see a nice pop and momentum to continue upwards here on the S&P 500. So overall, markets are pretty bullish. Futures on the S&P again are up 0.7%. NASDAQ futures are up over 100 points, up 0.9%, so almost 1% up in the tech futures, which is very nice. And the Dow Jones futures are up 190 points right now, up almost 0.7%, with gold futures up about 1 point, up 0.07, so not much there in gold. And silver is up about 0.07 as well. So overall, I mean, the futures that I personally track, S&P, NASDAQ, Dow, gold, and silver, they're all up, pretty much continuing the bullish momentum that we saw from last week. And again, take the futures with a grain of salt, guys. For all we know, they could end up going down from now till tomorrow, but as we're seeing it now, again, it's looking pretty green. So that's kind of the little market breakdown at this point and what the futures are looking like. Let me know your thoughts down below in the comments. What are you guys doing this upcoming week? Are you bullish? Are you bearish? Are you shorting? Are you buying? Let me know your thoughts down below. So earnings this week, guys, we have a bunch of companies, a lot of Chinese companies this week, especially tomorrow. We have JD.com, we have another Chinese company, IQIY here, and then on Tuesday we have some big conglomerates here in the U.S. We have Walmart, we have Home Depot, we have also the infamous NIO, guys, NIO. We'll talk about that one a little bit later today. And then Wednesday, we have Target, we have Lowe's, we have NVIDIA, which is big, we have Bilibili. Then Thursday, we have BJ's, Macy's, which, guys, I don't know how Macy's is still around, but hey, we have Macy's on Thursday, and then we also have Ross, Intuit, and then on Friday, we have a bunch of companies here that, quite honestly, I don't track other than Foot Locker. So pretty much a lot of the big earnings are behind us, but for this week, we have a bunch that I'm personally watching, such as Walmart, Home Depot, NIO, Target, NVIDIA, Lowe's, BJ's, Intuit. These are a couple that I'm personally watching. So, yeah, I mean, we're keeping an eye on those companies here. And going back to ThinkOrSwim here, we're going to start off with stock number 1, and we'll break down some of those earnings for this upcoming week, some of the individual companies here a little bit later on in the video. But stock number 1 that I'm watching is ZM. And let me be honest with you guys here. A lot of people are saying, oh, the stay-at-home trade is gone. The Zooms of the world, the Pelotons, the Netflixes, all of these companies are their rallies are done. That's what a lot of people are saying now that we got the V-shot news from Pfizer last week. And quite honestly, guys, and I've said this before and I'll say it again, I'm not buying that. I think, quite honestly, that there's more upside in these stay-at-home stocks. The stay-at-home trade is not dead quite yet because we're seeing a big spike in CV across the country, right? Across many places around the world as well. And you have to ask yourself, okay, we got the V-shot, but it's not going to be spread and widely available at least for what, 6 to 8 months, maybe a year from now. So until then, there's going to be a lot of more cases, quite honestly. And the risk of shutdown is pretty high right now, and especially if Biden gets in 100% official, and he already has his task force in place saying that, okay, we might need to shut down for 6 weeks. I think we might see another shutdown. And even the risk of us or the anticipation of us shutting down might spike these stocks up either way, right? So the truth is, guys, I'm not buying the whole stay-at-home trade is gone. I think that this dip in Zoom is very attractive from 588, and arguably, guys, 588, yeah, that was overbought, overvalued, but we've seen a significant drop from there, over $200. I mean, that's a 33% haircut from 588 to where we are right now. And if we get this shutdown, we get the anticipation of a shutdown, these stocks could easily fill that gap back up. The Zooms of the world, Netflix, Peloton, and a bunch of other ones. And you have to look around your area. Are things shutting down in your area? Me personally, I'm in New Jersey. I know a lot of schools around me are shutting down. A lot of restaurants are at risk of shutting down. In New York, they're already shutting down a bunch of places. So you guys have to look in your area. This is getting serious. I mean, it's been serious, but it's getting more serious now. And I think Zoom could benefit, obviously, from another shutdown, from another stay-at-home movement that we might very well see now getting into the winter in these next couple of months. So Zoom, guys, it's still in a downtrend, no doubt about it. If I extend this drawing to the right. We're still under both moving averages here on the 4-hour chart. We failed breaking out of 440, which was a big resistance we talked about last week. It would have been nice breaking out of 440 and going up to 460, but it didn't happen. We hit a lower high at 440. We broke back under 420, and we closed right around $400. So it's going to be interesting, right? If 400 can hold tomorrow, are we going to fill the gap back up to 415? If that breaks, maybe 440. If that breaks, that is where I think the overall trend is going to reverse from down to back up. And we might see a momentum shift if 440 and especially if 460 is able to break here on Zoom. And keep an eye on this, guys. We have earnings for Zoom coming up here in about 2 weeks on the 30th of this month, which those earnings might be really strong, especially because a lot of schools are using Zoom, universities, office places, and just a lot of businesses in general, guys, are using this product. So these earnings could, who knows, they might be the best ones yet. We just have to wait and see. But again, overall, I'm not in the camp of, oh, the recovery stocks are going to explode now and the stay-at-home stocks are screwed. I'm just not buying it quite yet. And that's just me being honest. And I'd love to know your thoughts down below in the comments. But overall, Zoom is one of the top stocks that I'm watching, heading into these next couple of weeks. Not just this week, but honestly, the next couple of months. I think Zoom has a lot of potential. And another one here is Virgin Galactic, which this week, guys, there's a lot of interesting stuff going on. SPCE here went up 3% on Friday, up 65 cents. It broke $19, filled the gap up to $21, broke that, filled the gap up all the way to $22. Now we actually closed above $22, held it as a new support, with the next resistance being at about $24.50, which does give it here, technically speaking, about 8 to 9% upside from where it is right now. And let me tell you, we have a lot of interesting stuff coming up here, which we're going to talk about right now, which if this goes successfully, knock on wood, hope it does, this stock could go much higher. So Virgin Galactic said it plans to launch its first manned test flight into space from New Mexico this month. The new space flight is scheduled for November 19th to the 23rd, which is maybe in 4 days from now or from about a week to 8 days from now. So in the next couple of days, we're going to see this manned space flight. And if all goes to plan, not only will this flight be the first human space flight to depart from New Mexico, it will also be Virgin Galactic pilot CJ, I hope I'm not butchering this, CJ Struckro's sixth time in space, and we'll see him become the first person to have flown to space from 3 different U.S. states, an extraordinary professional achievement. While we and another thing here, while we have flown passenger seats on previous flights, this will be the first time in flight where we have actively reclining the seats once in space. And if you guys actually saw the new spacecraft, how it works, once you get into space with Virgin Galactic's spaceship, or whatever it's called, spaceship, we'll call it a spaceship, those seats actually recline, the seats that the passengers will sit in. So in this space flight, they're actually going to have dummies in the seats strapped in, and they're going to see how the mannequins end up, floating around, and, how they end up, reacting, although they are mannequins, guys, so they're not going to pretty much do anything. But it's interesting to see how that's going to go down in terms of the seats there, and they anticipate that this upcoming flight will provide some of the data for them to close out the final 2 verification reports required by the FAA to remove the remaining provision in the current commercial space flight license. So if this goes smoothly, if all goes well, knock on wood, guys, I hope it all goes well, this is going to be a huge step forward for Virgin Galactic to get closer to actually having customers going up to space and experiencing the weightlessness, have the seats go down. And the reason why the seats recline and go down is because that gives more room for the passengers to actually float around in the cabin and experience the weightlessness, which is what the whole idea, the whole point of, going on a Virgin Galactic flight is. And upon successful completion of this flight and data review, we will proceed to the next phase of testing, where we will fly 4 mission specialists in the cabin to test and refine the equipment, procedures, and training and overall experience. So I hope this all goes well, guys. This is one step in the right direction for Virgin Galactic to really get to the next level. And we all know in a couple months, Q1 of 2021, at least at this point, Richard Branson is expected to fly and actually go into space with the spaceship. So that's going to be another huge milestone for the company. So if all goes well, if this all goes smoothly, and again, guys, like I said earlier, I'll say it again, I think if this goes successfully, I think the stock could break out of $24, $25. I think it's possible. And if that happens, I mean, the ceiling here could be 27. I mean, that's where we ended up topping towards the end of July. So I'm very excited about Virgin Galactic. Going to be watching this very closely this upcoming week. Another one here is RIDE, ticker symbol RIDE, Lordstown Motors. And this one filled a nice gap last week. We got low, hit a low at about $13 after a big beating from $26. So it lost about 50%, broke back above that 14-15 resistance from back in the beginning of August, and towards the end of August, we filled the entire gap from $15 up to about $18. We closed under 18. So for this week, very simple, guys. If we get that break above 18, I think RIDE here, Lordstown Motor, could have a nice little spike, some momentum from $18-19 up to about maybe $20.75 to about $21. So I'm watching Lordstown here. I think there is potential, especially because, honestly, guys, it's been beaten down so much. I think it's due for a recovery. And the next one is Alibaba, which has also been beaten down a lot, guys, and I think it's due for a recovery. This one's gone from 320 down to about 260. That's about a 20% drop. And what do we talk about all the time, guys? If a stock ETF index goes down 20% from its peak, that's a bear market. So technically speaking, Alibaba is in a bear market right now. And the bottom might not be here. I mean, we ended up trying to break out of 266 last week. We failed. We had a big red day on Friday, down about 1.3%. We hit a lower low in the downtrend here. And this is telling me, guys, hey, we might be going down to 250. I think 250 is a price on Alibaba where even I, honestly, and I don't like buying before, the confirmation of a breakout. But if we get to 250, guys, I might just nibble a little bit here, even though we might not fully reverse quite yet at that point. But for me, guys, anything, above a 20-25% drop in a conglomerate company like Alibaba, which is a great company at the end of the day, I think that's worth buying up. And the whole reason why they're dropping is because of the Ant IPO, which could be an overreaction here. It could not be. Who knows? But anything between 250, 260, I would be very interested in picking up some shares here of Alibaba. But again, it's kind of a falling knife. There's no bottom quite yet. And I think we might end up getting a confirmation of the breakout if we're able to take out 265 and 270. From there, we could be climbing up higher. But again, since we haven't gotten that confirmation yet, it really could go either way at this point. And Coca-Cola KO is another interesting one I'm looking at. Did very well last week on the V-Shop news. We got a big pop from 50, filled the gap up to about $53. We broke 53, went up to 54, pulled back down. We held 53 as a new support. And honestly, guys, Coca-Cola has a long way to go to get back to that pre-crisis high at about $59, $60. So this could be the start of that push, right? From 53 back up to 60. So this is not going to be one of those stocks that, like NEO, where you can double your money in 2 months, right? That's not Coca-Cola. But you might be able to get a quote-unquote safer swing trade with this company, with this stock. If we're able to hold 53, climb back to 54, break that resistance, that could be a nice little, momentum play back up to the mid 50s, high 50s. So I'm keeping my eyes peeled on Coca-Cola, ticker symbol KO. Another one here is Costco, guys, ticker symbol COST. Hit a high at 392 last week, aggressively sold off to about 362, shedding $30. How much is that percentage-wise? About a 7% drop. We ended up holding a higher low on the 180 SMA 4-hour chart here, recovering off of that low. And now we have a big resistance coming up at about 385, which we could get a momentum play up to 385. But I think a lot of the move could end up happening if 383 to 385 breaks. We could end up getting a play back up to 390 to test that resistance from the 6th of this month. And we also have earnings coming up here in the beginning of December, which arguably could be great since Costco has been doing pretty well throughout this whole crisis. So I'm watching this closely, especially if we squeeze out of the mid 380 level. That could be a breakout play here on Costco. And Adobe is another one that I'm interested in, ADBE. This one is on the brink of getting back into the horizontal channel here between 511 as resistance, 510, and support at about 470, right? We're literally right under that resistance at 470. If it breaks it, holds it as a new support, this could make its way back up to 510, which it's done multiple times here. It's held 480, 470 multiple times, and it's rallied back up to the 500 level. So I'm watching it to see if it's able to do that again. And just like Costco, we have earnings coming up here for Adobe in the beginning of December, which I think will be pretty good, as we've seen this company do well over the past couple of months, as a lot of people have been using and downloading all the Adobe products, me included, guys. I've been using Photoshop pretty much every day as I make my thumbnails on Photoshop for the YouTube channel that you guys are watching. And have you guys subscribed yet? Make sure to subscribe to the channel. I'm trying to get to 20,000 subscribers, and I do appreciate all you guys out there for tuning in and subscribing to the channel. It really does mean a lot to me. So Adobe, anywhere from 470 up to 500, I think that is very attractive. And MasterCard here, guys, MA. This one is interesting. We're seeing a descending triangle here on the 4-hour chart, but we actually broke out of the descending triangle, out of the resistance here. We got up to 350. We filled the gap up to that resistance in the middle of October, from the middle of October, and we ended up pulling back down from that 350 level, and now we're holding 330 at a higher low, and it seems like we're breaking out here on the 5-day, 5-minute out of both moving averages. So MasterCard at this point could be a play from 330 on this breakout up to about, I'd say, 355. So I'm watching MasterCard very closely on this move right here. I have about 6 to 7% upside. I think that's very doable, especially if tech, especially if we get a nice green market maybe tomorrow, the next day. I think MasterCard naturally will go up, especially as it's been beaten down pretty badly here over the past couple of weeks. I mean, it has recovered, and the momentum is slowly shifting in its favor, to the bulls at least, bulls' favor. So we'll see if that continues. That's ticker symbol MA. And another one here is SLV. I can't leave out the precious metal plays, guys, because I have love for the precious metals out there, gold and silver. And silver and gold, they've both been beaten down, especially silver here. It's down from 27 all the way down, or actually SLV is down from 27 down to about 23. Not silver. Silver itself is down from about almost 30 an ounce down to about 24.50 an ounce, 24.80 an ounce right now. So I think silver has a long ways to go back up to 26 at least, which is a resistance from a couple days ago. And if that breaks, I think we're going back up to 28, 29, no doubt about it. And SLV, which tracks silver, right? It's an ETF that tracks silver. I think, okay, we might go 23. We break 23. We might be going back up to 24. That's the resistance from last week. And if that breaks, we might be straight shooting up to the mid-20s, 25.60, which is another big resistance, and above 25.60, maybe up to about, let's say, 26.60. So SLV, silver, gold, and even Bitcoin, which is not really an official precious metal, I think all of those have some good upside here, especially with the current monetary policy. We know we're going to get stimulus in the next couple months. The question is, when will we get it? But when we get it, it's going to devalue the dollar, silver, gold, Bitcoin, these inflationary hedge assets, I think will do well. So I'm watching silver, gold, SLV, GLD, and Bitcoin, which could be traded via GBTC here on the stock market. And we have a couple other ones here. NIO, guys, NIO. We got a report from Citron last week on Friday, which said that NIO got ahead of itself. It's way too hot, ran up way too much, and they actually had a buy target, or they actually had a buy rating on NIO when it was $7 a couple months ago or something, and it's gotten way too ahead of itself according to Citron, and they actually had a price target of $25. So they're pretty much saying $25, that's the price target. And what they could be doing, I'm not accusing them of this, of course, what they could be doing here is, okay, we're going to put a short report out, make people freak out, make the stock go down ahead of earnings, which, hey, we might think, hey, maybe their earnings are going to be good, so the stock goes down, and maybe we can buy some shares before earnings, knowing that the earnings report might be great, and then the stock goes back up. Not saying that they're doing this, not accusing them of anything, but a lot of the time, these short reports, they could be trying to manipulate you. Let's just be honest. And we're seeing that with the stock. Not saying they're manipulating you, but we're seeing a lot of people, okay, freaking out. The stock went down from $54 to $40 in a day. That is a bear market, literally in a day here on NIO, down about 25%. So yeah, I mean, I'd love to see what they were doing. I'm sure they shorted the stock on the way down. Maybe they picked up some shares before earnings. Nobody knows. Nobody knows what they're doing. But just keep an eye on it and understand that, hey, they could try and manipulate it by doing those short reports. And overall, it seems like we are doing great when it comes to NIO, technically speaking. And I've been on the channel, guys, calling and begging the trading gods up there for a pull down on NIO, and we got it. Although I do want to see a further pull down, but I'm not sure we'll get it. But I've been saying it's a bit unhealthy at 48 and especially at 54. So I'm happy to see it coming down a bit. And technically speaking, here on the 4-hour, we are holding the 50 SMA. We are holding 44.45, which was a resistance from last week as a new support. We're holding it. So let's see, guys, what happens tomorrow. I mean, will we see a nice gap up on NIO? If we do, believe it or not, we could end up rallying into earnings. And speaking of some other Chinese EV plays, I mean, we saw Li Auto last week go ballistic. They reported earnings. Let's see, did they do well or did they go up after earnings? Let's see here. They reported earnings. They went up pre-market, but then they dumped as that Citron report came out for NIO. And in general, guys, I think all the Chinese EV plays went down last week after that NIO report, and rightfully so, because all of them, in my opinion, were overbought. So the question is here, will we hold this dip? Will this end up being a dip buy on these Chinese EV plays? And this week, we'll see how it ends up going down. I mean, XPEV here, XPEV, also is at an old resistance as a new support here at $40. You know, same with NIO right at $45. So let's see what ends up going down on these dips, and we'll play it accordingly. So that is NIO. Earnings are coming out here on Tuesday, and Shopify is another one that, like Zoom, this one could very well do very well in these next couple of weeks, months, especially if we get a shutdown, we get the anticipation of a shutdown, we get more CV cases spiking up, people are nervous, they stay home, they don't want to go out. Shopify is one of those companies in the right position to do very well. So this is one that has been beaten down from about $1,100 down to about $870, $880. Now we're down to about $918. So this is a decent drop. I mean, it's down about 20%, putting it in bear market territory from that high at about $1150. So the big support coming up is around $880, I'd say $860 to $880 to about $900. So I think if we're able to hold that general area, this could be a dip buy, maybe for a play back up to $1,000 to $1,050, right? And I'm not completely throwing the stay-at-home stocks out the window. Like I said in the beginning of the video, I'm not buying it. I think there's still potential. There's still money to be made in the Shopifys, the Netflixes of the world, the Zooms, the Pelotons. Even though Peloton is my least favorite one, I'd say out of all of them, I still think that could end up bouncing back here, especially, guys, if gyms end up closing. Because here in New Jersey, we're seeing gyms might close down. I think New York, they might have already closed down. Who knows? And Peloton will obviously benefit from that, as more people will end up buying bikes, workout equipment for home to end up working out from home, right? So I'm watching Shopify here. SHOP. NVIDIA is another one, arguably the most important one. And I probably should have had this at the beginning of the video, but anyway, this is arguably the most important one to watch this upcoming week, as they are reporting earnings here on the 18th, just 3 days away. And they're actually at a pretty decent spot when you're looking at, okay, risk reward. How much upside is there? How much could it go down? I think 530 is a pretty big support on NVIDIA, with upside to about 580. That gives it about, from 530 to 580, about 8 to 9% upside. And let's say you put a 2% stop on that, or let's say you let it go down to maybe 520, 515, depending on your risk tolerance. You know, hey, that could end up being a pretty good risk reward for you. And the technicals, in my opinion, are in the Bulls' favor at this point in time. And if they get a good earnings report, this thing could easily explode, maybe back up to 580 and maybe out of that all-time high at about $600. So I like the setup here on NVIDIA for a move tomorrow, maybe at some point this week. And Fastly is another one that's been beaten down aggressively, but is coming back quite strongly now. Went from 136 down to about $60 on that news from TikTok. The revenue not looking that great from TikTok, and guidance wasn't that great either. And since then, I mean, it's bounced back nicely from 63 back up to about 75, and now it broke the gap, or the resistance, from about the 75, 77 resistance. We ended up closing above it now. And I think there is a nice gap to fill from about 77 up to about 88 to, $90, right? That's honestly, it's done that many times in the past. Look at here, guys, from the beginning of July all the way to the middle towards the end of September, we made that 77 up to about 89, 90 move multiple times. I mean, take a look here for yourselves, guys. So I think there is potential on Fastly from here. I might, if I'm feeling a little bit crazy, I might end up picking up some longer term calls. Maybe. I honestly haven't looked at the options chain. And speaking of options, guys, I actually made an Option Greeks video this weekend on Saturday, literally yesterday. I'll link that down below if you guys want to learn more about the Option Greeks, Delta, Theta, Gamma, Vega, Rho, all those. So if you guys want to learn more about that, link down below. So Fastly is pretty interesting in my eyes. And BBY, Best Buy, is another one here that I actually haven't looked at, but somebody in my DMs actually shot me the Best Buy ticker, and I was like, wow, this one's looking pretty attractive. So I figured I'd cover it in today's video. It's down about $13 from its peak, from 128 down to where it is now at about 114, and it seems like we're holding the overall uptrend on this 180 SMA here on the 4-hour chart, and it's been consolidating there the past couple of days, right? Look at the 5-day, 5-minute, 1, 2, 3, 4 days of consolidation. Now, all we need to see is the breakout, and that is where we could end up capitalizing on the upwards momentum. I think some targets here could be $119, $120. Maybe we could end up getting up to 122, and maybe 127 is another target here that could hit in the upcoming weeks. And mind you, guys, earnings are coming up here on the 24th, about 9 days away, exactly 9 days away from today. And the last one here is Target, guys, TGT. This is one that I think is breaking out. You guys can see here the descending triangle. We took out the resistance, which is kind of what we're seeing with MA. If we go back to MA, right? Very similar pattern here. We took out the resistance on both MA and Target. So now I'm looking to see, okay, is Target going to fill the gap from 160 to 162 up to maybe 167, 170? I think that's possible, and that is why I'm watching them for this upcoming week. And they do have earnings coming up here in 3 days. I think that's on Wednesday. So keep an eye on Target. And that's pretty much it for the video, guys. Those are a bunch of stocks that I'm looking at this week, and let's quickly name them. If you guys want to write them down on your pad and your notes, let's talk about quickly which ones I talked about. So we have Zoom, Virgin Galactic, Ride, also known as Lordstown Motors, Alibaba, Coca-Cola, Costco, Adobe, MasterCard, Silver or SLV, Neo, Shopify, Nvidia, Fastly, BBY, and Target. Those are 15 stocks that I'm looking to buy this upcoming week, and there are a bunch of other ones that we can't mention in this video, but if you guys want to talk and hear more about the stocks, make sure to subscribe to the channel and leave a like on this video. Let's try to get 400 likes on this video. So thanks for watching, guys, and leave a comment down below, and don't forget to claim your 3 free stocks, which runs out here on the 18th of November from WeBull. They're valued up to $1,600. All you have to do is deposit $100 using that link down below. And by the way, I actually also get 3 free stocks, and I do appreciate you guys, as that does end up helping out the channel. So that's it. Thanks again for watching. Have a great week. Hope you all had a great weekend. Good luck this week. Stay safe out there as well, guys, and peace out.